Okay, today's class, we'll look at, today's lecture, we'll look at the if functions. We'll look at SumIF, AverageIF, and I think CountIF. Then we'll look at them as just basic functions, just first to understand what these functions are able to do and how you can use them. Then maybe we'll go into the practical part of it, how you can use these functions in data analysis. You're welcome to our academy. This is an Excel Academy or Financial Modeling Academy. So since you all have these functions, so we've got to go to cell B15, highlight and delete. Highlight and delete. Okay. So we'll start with AverageIF. Maybe this side, let me also just type CountIF. I know we have looked CountIF, we have looked at CountIF, Mrs. Slower, but there's no harm looking at it just here or going through what this CountIF does. So we'll start with AverageIF. Just as a basic function, AverageIF, just type equals AverageIF. Once it is in blue, the shortcut is to tab. Press tab key, Jason. Then hold Control and A so that you open the function argument box. Like this. So this function has three syntax arguments. One, it is the range. The range, basically, you're actually looking at your data set with that column, the column where you're actually going to determine your criteria. In this case, we are saying this is basically your data set. But you specifically go to a specific column. So like in this case, if you check what is in A15, you will see that in that column A, starting from 15, it is basically products. So you have the products, you have book, CD, and DVD. You want to do an analysis to check what was the average sales for that particular month, day, or week. So you're actually averaging the sales you made on selling books, or the sales you made CDs or DVDs. So you're looking at the book sales, what was the average that was actually generated or made? Natasha, you're welcome to our Financial Modeling Academy. It has been long and good to see you, though I can't see you, but I'm assuming that I'm seeing you.
Thank you.
Yeah.
What have I missed?
You haven't missed anything. That is when we are starting. So you go to your average and SumIF worksheet. Go to B15. Since we want to look at the AverageIF as a function, first we want to understand how this AverageIF works. Then now we can actually go further and see how best we can use the AverageIF in our data analysis. and why this function is so important when you are actually analyzing financial data or any other data. But the AverageIF function has 3 syntax arguments. One is the range, where you want to pick this data. But the range must rhyme. It must be able to mirror what is in the criteria. What I mean is, if the criteria in this case is book, meaning that I cannot pick the range for customers, I have to pick the range for products. That is how it works. So I will not go and pick the customer range, I'll pick the product range. Why? Because the criteria that I'm looking for a book. If today you are asked to look for Myron Brothers, for example, you're actually looking for a Myron Brothers as a criteria. The range will be a group of criminals, because you don't expect to find Myron Brothers in a very saintly population or a population of saints. So there's a logic between the criteria and the range. So I told you that there's 3 syntax arguments on AverageIF. There's a range, then there's a criteria. A range is a group of cells, but it is also possible having only a single cell as a range. But the criteria, it will always be a single cell or a hard-coded variable, meaning that I might not want to use a cell. Like in this case, just watch. I'll do like this. I'll say equals AverageIF, just watch. So I'll go to this range. If, say, for example, I'm looking for customers, I want to know how many customers are there. I'll go to the range, to the criteria. I'll say Zulu. I'll type Zulu. Average range. What was the sales? I'll come in there in terms of the price. I'll do like this. So what I've done is I've hard-coded the variable, the criteria. So a criteria cannot be a range or a group of cells. A criteria could be a single cell. The data that you get in a single cell, or you can hard-code it. So let's start. We say equals. And here, Tim, I'll also be teaching you about, maybe I should not confuse you now, maybe it should be the last topic when we are actually done with Excel, with all these topics that you're going through. I know once we are done with this, we'll go into what we're calling as advanced. Then I can spare a day or so to train you in what we call the first principles. These are modeling principles, like you accountants, you have IFRS, all those standards. So even as financial modelers, we have standards that we follow. Maybe, since I'm still training you so that it's stuck into your subconscious, maybe I'll be just showing you that using a fast standard. The first standard, guys, is flexible, appropriate, let me just show you this. Let me just open this thing so that you're able to see, and I'll forward it to you on the first standards. Just opening it. Sorry. Sorry, let me just open the standards. Then I can even email them to you. Then appropriate time. For your own information, financial modeling is not Excel. We use Excel to develop models. Just bear with me. So these are the standards that we follow in financial modeling, or you can choose to ignore them, on how you design your workbook, your worksheet design by using the FAST philosophy or standard. FAST, like I said, this is flexible. Your model has to be flexible, it has to be appropriate, structured, and most importantly, transparency. So it has to be very transparent. So how do you make your model transparent? It is the way you design your formulas. So like in this case, if I'm not using FAST principles, I would say equals average if, and I'll show you, let's do this, type average if equals average if. Equals average if, Control A, you open the function argument. Like I said, you have the range, you have the criteria, and the average range. So you go to the range. This is what you can do. Say if you are here, you hold your shift key. First you click the first cell that you want to do as creating a range. You can hold the shift key and take your cursor to the last and press on Move Iter. Or you can do this. Shift Control down arrow key, then you do like that. You can do anything. Any option is okay. So you pick that range. That range has to be locked. I know I haven't actually taught you on absolute and relative referencing, which I'll be doing in the next part, which we are calling as intermediate. So, because we don't want this range to be moving, we are going to lock it. But before we lock, let's do it wrongly so that you see why you need those dollar signs. Those dollar signs, they are locks, or what we call anchors in modeling. You can press your F4 key, it will give you those dollar signs. If it cannot give you those dollar signs, then you hold Shift and F4 key, you'll be able to see the dollar signs, 4 dollar signs. Or if it cannot work, then you hold Fn key and F4. It should be able to give you those locks. These 4 locks, what they mean is you have locked the columns and the rows. meaning that the A2, cell A2 is absolutely locked. Same with A10. Because if you don't lock, it is actually going to be moving. And I'll demonstrate that to you once we are done here. But what we want to pick in this case, we cannot pick the range that has customers or customer range. We cannot pick that simply because the criteria that we want to use is for specific products. So it does mean that we will need to go to product like this. And you lock F4 key. Natasha, I don't know if you are saying anything because it looks mute, but like there's something that you're trying to tell me or to share with the team. You can unmute yourself if that's the case.
No, there's nothing.
Oh, okay, okay. So that is what you're picking. You're picking the product range. You press the tab key, taking you to criteria. So all you're actually looking for, you're looking for a book. But this book, you can only find it only in the population. The customer population, that is where you can find the book or a book. Okay, so let me repeat how to log Mrs. Logan. So in this case, first, you are trying to pick the range. You already have a hindsight that what you're looking for is a product. In this case, it could be a book, CD, DVD, whatever, but it's basically a product. So with the range, you go to a range of customers. The customer range, or the product range, sorry. So we pick this. So what I was saying, because we want to put these locks, there are two ways in which you can do it. You can press the F4 key. The F4 key, where you have the escape, there's F1, F2, these are functional keys. So you can press the F4 key to give you those locks. But some laptops might not actually be configured in that way, meaning that you have to hold the shift and F4 key. Some, again, it might not give you what you want. You can hold the Fn key and the F4 key. You can press the Fn and F4 key. Fn key is next to the control key. So once you are done with locking, I hope, Mrs. Lower, now you have managed to lock. But if you cannot lock like that, then you can manually do it, but that would be more of a pain. You can manually lock it like this. Shift, you go to the $sign, you go there, $sign, you put all the $4 signs. Is it okay, Mrs. Lower? Hello?
I'll keep trying. It's like my laptop is one of those that are not configured.
No, what you can do
in that way.
Into this. You pick that. You hold your, if you can't hold your shift F4, let me do this shortcut. It will be your shift key and F4 or FN F4 like this, or just F4, or you can go manual, meaning that you physically type in the dollar signs. Jess, is it okay?
Yes, it is.
So you go to the range, a customer product range, you pick the whole range, you lock, tab. Now you go to A15, click in A15, because you are trying to average the sales you made on this particular product, which in this case, it is books. What was your average sale? This can be on a daily basis. It can be on weekly or monthly. So you go to average tab, average range. Know that it's not possible to average text, meaning that when you go to this criteria, to this syntax argument, you are focusing on numbers or values. So in this case, we are actually going to average the price or sales up to there. Do not forget to log. So while you are locking the ranges, like I said, and I'm going to demonstrate it to you, you don't want the range to move as you move the formula down. As an auditor, Jesse, this is one of the most important things that you should look for when you're actually trying to audit people's bank reconciliations, some financial reports, management accounts, and you ask for the source document from your clients, your internal clients, since you're an internal auditor. Because if you don't understand the principles of these dollar signs, trust me, you'll be getting wrong things. And most certainly, you'll be producing wrong reports. And you have seen it. I was invited by Minister of Finance to train their internal audit team. I had to explain the importance of these dollar signs. I did the same when I went to Rwanda. I've done the same in most of these organizations where I go to train people in understanding Excel, data analysis, or financial modeling. These dollar signs, Natasha, they are very, very important. I know we have a topic, maybe in the next 2 days, we have a topic specifically that looks at these dollar signs. So press OK. Then you can just double click just here so that you take the formula down. So there's some problem here. I don't know what is happening. Why are we getting the same numbers? Let me save first. Okay, they have changed. This thing is on, it is on manual, it's not automatic. In case your numbers are also not changing, where you do your computations as an auditor, Jesse, and you see the numbers the way they were what I did here. First, let me do this until I had to save. Then just do it, but don't do it, just watch. So I pick the range, I log, I go to the criteria, I go to average range, I log, I do like this, check what was happening. As an auditor, you do such a thing, you realize that the numbers are not changing. Do not say, no, Excel is not working, what, and all that. You go to my friend Alice and you start complaining. You check on the formula, like what I did. Went formulas, stress precedence. I saw that it is okay. The first one is being captured correctly. Then I say, let me check on the last one. Stress precedence, it is okay. But the numbers are not changing. What could be happening? So I know immediately that my spreadsheet is set on manual mode. It is not automatically calculating. It only calculates when I save, but I don't want to do that. I want it to automatically calculate. So what would I do? I'll go to File. I'll go to File. From File, I'll go to Options. You click on Options. I'll click on Formulas. From Options, Formulas. So on Calculation Options, I'm able to see that my spreadsheet is set on manual, meaning that, and there are reasons why sometimes we set our models on manual calculation, that it only saves after you have done, it only computes after you have saved. You don't want it, you don't want to overburden your laptop. So if you are dealing with very huge models, you would find that it will be more reasonable for you to manually set your spreadsheet so that it does not automatically compute on real time. So it only recalculates the workbook before saving. But all we want to do is we want to have it on automatic. So you click on automatic. So why it converted itself to manual? Because I don't mostly put it to manual because of the models are quite small. I was auditing one of the models developed by our consultants. It was quite big with a lot of macros. So what that modeler decided to do was to set his spreadsheet on manual calculation. So now I can press automatic and these numbers will change. I hope you have these numbers. Natasha, do you have these numbers? Are they the same? Jason? Okay, that's okay. I hope Mrs. Lowa, you're also getting it correctly.
Yes, I think.
That's not correct.
Except where on book you have 46.75, I have 47.
No.
Then on DVD you have 44.67, I have 45.
No. What you do, just highlight the numbers. You can highlight the numbers, go to home, and put the decimals here. Check. Here you can reduce, but just put the 2 decimals if you want it, like this. You'll be able to see that these numbers are coinciding, so that you have 2 decimals.
Okay, I've got it.
Thank you so much.
Thank you.
Okay.
Sorry, please. Can you repeat the process of changing it to automatic? My network was tripping a bit.
Okay. So what you do, Natasha, you go to File. From File, you go to Options. Just down there, you go to Options. Then you go to formulas. So it is advisable, Natasha, it is advisable that if you are working on a very big spreadsheet, which slows down your system, it is better that you have it under manual. That is if it is very big, so you don't want it to get disturbed. For example, if I'm working on a spreadsheet that is over maybe 20 megabytes, maybe 15 megabytes, and I believe that it slows my machine. You have seen this situation where you're working on a spreadsheet that slows your machine. What do? You take it to manual. So it's like you have queued it for some time. It is in a coma, and you're operating on it so that it doesn't get disturbed. Imagine operating on a monitor. So the best way is to have it in a coma status. So you take it to manual. But then if it is on manual and you're working on a very reasonable spreadsheet, which is not that too big, it is advisable that you take it to automatic. So you click on automatic and humbly press on OK. So that as you are working, the spreadsheet is able to self-calculate. Okay, now let me just show you what would happen if I don't put those logs. Say equals average if range, comma, I pick the criteria, and then pick the price. So I have these numbers. So this is what's going to happen. So if I come here, check the first one is going to be correct, trace precedence. You have seen where it's hitting. The range hasn't moved. The product range is okay. The price range is okay. Then I go to the second one, you're going to see that it will move, it will leave this row number 2. So row number 2 has been, you see it has moved. Row number 2 is not being covered. What is actually now covered is this blank row number 11. So it has moved. Why? Because we did not put the logs. I go to the last one, you see it will move here and it will start from here. So Jesse, this is very important for you who is in auditing, but more important for those that are actually in operations like Mrs. Lower and Natasha. These logs. We'll have a dedicated time where we're going to look at these anchors. They are extremely important. Okay. So now they're okay. Let's check. The first one is fine. It hasn't moved. The second one as well, it is okay. It hasn't moved. The last one, it is still okay. The ranges haven't moved. Okay. So the question would be, why would you want to use the AverageIF function? For a person like Jesse, you would want, for example, to audit overtime allowances at Southern Division, for example. How are they managing overtime? Is it on average, is it below the threshold that has been given by management? Are they going beyond that? So maybe you've done your first analysis. You have found that the overtime as a whole in Southern Division is higher than the threshold, which has been given by management, and maybe higher than the budget. So you will then now go into a further prognosis here, further analysis to start dissecting these numbers so that you know where the problem is. So you have this database. The employee database, you have the whole employee database. And after you did your analysis, you discover that the overtime allowances or costs are higher than the threshold. But this employee database, these employees have different grades. If it's in Boma, maybe it will be ZP1. If it's in police, ZP1, meaning that's Mr. Kanganja. Then it goes ZP2 to be the Katangas and the group, then it goes up to our friends who are constables. So we want to know, where is this abuse happening? Yes, we know that this division is Southern Division. The overtime costs are higher than what has been agreed by management. But where is the root? Where is the problem? Where you want to know where the problem is? Is it with those that are in management? Oh, sorry, I received the phone call and just respond to it. Okay, sorry about that. So what I was saying that as you would want to know where the rot is happening or where the problem is coming from, is which class of employees are maybe abusing the overtime privileges, so to say. So what do? You check, you say, what is the average overtime cost for this particular type of employees? Maybe the unionized, or under the unionized, which group for this particular grade, if you want to go into those details. So you say average if, you pick the range, meaning at that point, you're actually picking the grades. Comma, what is the criteria? The criteria is that you're actually looking for the unionized. Or in the BOMA, they call them at daily what? Daily, I don't know, daily what? CD, whatever, something.
Classified daily employees.
Yes, classified daily employees. So you want to check on that. That would be your criteria. Then the average range would be the overtime costs. You do the same with other classes, other employee classes, like what we have done here. Imagine under the summary, we had the types of employees, the employee classes or grades. So be able to see, no, I think this employee class, this is the one that is abusing the overtime privileges, overtime, whatever allowances, privileges, whatever you want to call it. So in real life, that is how you use your average if. I know we'll try to go a bit practical to check on this, the data that we have down there. Jesse, are you with us?
Yes, I am.
So even Natasha, with your data set, you'll be able to do your analysis to check if you have these product classes in terms of the tariffs or the types of customers you have, customer categories. You can actually say you want to know which of these customers, on average, which one is giving you the highest. So you average if all the customer categories, like what we have done there. There is no analysis. If your analysis does not contain averages, then you could actually be missing very insightful information. And you could even find yourself sliding into wrong conclusions. So as data analysts, auditors, financial experts, you need to befriend averages in your analysis. You need to befriend averages. It's a miracle mathematical principle. So from the average if, so you have checked that in terms of books, book, this is the average sale that was made. Obviously, you know that you have different numbers in terms of the actual sales. Like for me, that was 22, for Zulu, it was 53, you had 46, but the average is 46.7. So from here, you're able to see that among these products, the one that is profitable is the CDs, followed by the books, then DVDs in terms of the products. So maybe you need to put in more effort on these others which are giving you a lower average sale. Could it be because there's too much competition and you cannot sell, you cannot peg the prices at the margins that you are required? Could it be that it's okay in terms of the price because the costs are much lower, but you have to do an analysis? So then we go to SumIF. The principle is the same. In the intermediate level, instead of looking at average if, we'll be looking at average ifs, SumIFs, CountIFs. But where there's no S as a plural, what it means is that there will only be a single criteria, but which is plural, where you find average ifs. It means that the minimum criteria is 1. Maximum, it will go to 255 criteria. I don't know what type of a financial model or a data model you would take all those requirements, because that is too much. So we go to the SumIF. SumIF will also contain the syntax arguments. There will be 3. There will be the same range, the criteria, and down there, the sum range, what you're summing. So let's do it. Equals SumIF, tab, Control A. So you know what to do. Product, log, tab, criteria, we have book, Then we go to sum range. Let it be like this, guys. Okay, I guess it's okay. Press okay and take it down like this. Check if you are getting these numbers. If you are getting different numbers, just know that what you have done is wrong. If you're not getting the numbers that are on your screen, it means that what you have done is wrong. Natasha, is it okay?
Yes, it is.
Mrs. Slow, have you gotten correct? All right, this up.
No, not yet. Trying.
Where are the issues? Just check on the formula, how it is, and just mimic the formula. Just mimic what is in the function argument box. Mrs. Slow, is it okay now?
Yes, it's fine now. Thank you.
Okay. I hope it is. I hope it is.
Yes, it's okay. It's okay.
Okay.
I think I'd messed up when locking because I'm locking manually. One of the dollar signs, I think I'd placed it wrongly, but I've corrected it and it's given me the figures.
Okay, thank you. So if I was using the first principles that we use in modeling, just check how I do it, just observe. It's sure the same thing, but with the first, because you're trying to make these formulas transparent and easy to read, you leave spaces. I'll do like this. I'll say equals, space, then average if. If you find a workbook which has been, where when you're checking the functions, where they leave spaces, just know that this person, the modeler, understands about the first standard. Then here on the range, I'll leave space like this so that it's easier to read. I log, comma, I leave space. I pick this, comma, I leave space, I look like that. It's one of the principles in FAST. And so that if you check, you'll see some spaces. It's easier to read. Space there. Suppose I do like this. So you see space before, space before, space before. It is not cluttered, it's not noisy. So if someone who's trying to understand what you are doing will be able to see that there's transparency. It's well structured, so to say, whatever. That's one of the standards. Okay. We now go to CountIF. CountIF, I know I looked at CountIF, it's lower. CountIF has only two syntax arguments. It has the range and the criteria. So if you're counting books, you want to count how many books you have. The criteria will be book, which is A15. The range is actually going to be B2 to B10. So say equals, and this space, since I'm used to FAST, so I'll say CountIF. Yes, I pick the range, I lock, comma space, which is the criteria there. Just that. Oh, sorry, I didn't open the function argument. I assume that you know to be like this. And press OK. So when you use your average, if your analysis, SumIF, CountIF, you are trying to count how many books were sold. What was the average sale per book, which is 46.75. So I know for sure that if I want to find the sum here, mathematically, I can calculate, I can say it's the average times the number of books I sold, which gives me the SumIF, which is the same number here, mathematically. Natasha, are you there?
Yes, I am. No, we are together.
Okay, that's good. So you want to know how many, because if it is in the case of Jesse, you are trying to check per each labor grade, what was the average? What was the average overtime cost, meaning per person? So you start maybe with this particular labor grade, whether it's GP9, you check, you find that per person on average, it was maybe 46. You count how many there were 4. So when you multiply that by that, it gives you the total amount per that particular category. But then you can go ahead and check what was the maximum under that particular category, which is books. I think Excel, they have now introduced, should be 2019 or so. I have to check. I think they have introduced what they are calling MaxIF, which works in the same principle, using the same principles of these AverageIF, SumIF, and CountIF. So all you're actually saying, you maximize if you find DVD, what was the maximum sale. So it then goes and picks the highest. Okay. Now let's look at it in a more practical way. This is just an example on loans. If say you work in the bank, just delete from here up to there and up to here. Let's delete that. You can leave the below average or whatever it is. Don't want us to use the CountIFs. We'll leave it like that. So here, what we want to do, imagine you are working for a bank or maybe a microfinancing institution. So also remove this one here. Okay. So these are the loans that you have been giving out to specific customers. So you have all these customers in Livingstone, maybe customer number 1, 2, 3, 4, whatever, in Kasama, the whole country. So you have been given the loan book as per customer, at customer level, sorry. So you want to do an analysis. One, you want to know what would be the average, what's the average customer, what's the average loan disbursements per customer, So that as you do your analysis in the following year, as you do your budgeting, you are doing your budgeting that is based on statistical truth. So that you know that on average in Livingstone, they get so much. And the average number of customers that get these loans are so many. But we can, if we increase by 10%, then we're actually saying we're increasing by so many customers. So the first thing that you do, and this principle, you can use it on the data set that you have for any sets of data. It's just a principle. Mr. Slower, I know you have that BOMA list. So if you have that BOMA list, whichever list you have, whether you deal in salaries, whether you deal in health issues, whatever list that you have, Jesse, Mrs. Slower, Natasha, you can use this principle because you're trying to analyze your data. The principle is the same. So I'm saying, if I'm working in a bank and I'm given these loans, specific customer, so the first thing that I'm going to do is to find the average loan disbursement, meaning per customer, how much loans are given on average. So say equals AverageIF we pick the range. This is the range. You lock the whole range. You're picking terms. So it's a range of terms. So you go to the criteria, you don't lock, you just pick the criteria in there. I'm picking B23 where the towns are starting. I'm picking Livingston in this case. I'm not going to lock it because I want it to go down. Then I go to the average range. So I want to average the loans. Remember, I can't average text to always be values. I log. Check if you have done the correct thing. Please just check what is on the screen. Then press OK and double click down there. Okay. So here, what you're trying to do, I'll go to the flag. Maybe I should just show you what this thing is. We are going to delete these flags. The concept here, we want to know if the loan is higher than or equal to the average, meaning that it's not a big issue. If the loan is bigger than or equal to the average, meaning that what that customer did got a loan higher than the average for that particular town. So these are the flags that we're putting here. If the loan here is greater or equal to, then it is actually going to be counted as no issue. You're going to put 0, otherwise put 1, but I'm not going to bore you with the if functions. I know I taught you on the if functions. We'll leave it for now because I'm sure next time if you still feel that there's need for me. Actually, in the intermediate, we'll actually look at more complex if functions or logical functions. So we'll leave it like that. So on average loans, we have already gotten the average loans, but we can still do it the same. We can say equals average if you pick the range, log, comma. Now the criteria we're going to pick here, check there. So let me open it. So the criteria is that the average range, it will be the same numbers, don't worry, the same numbers that you got on the loans. I'll look like that. And press OK. So these are the averages. Mrs. Lower. So some numbers you got from here. There are so many ways of doing this. If you want, you can use your VLOOKUP to actually pick your averages this side. You still get the averages, the same averages the other side as here. So we have these averages. So what we want to know is, on average, the average loan disbursement we can make per customer in Livingston is 31. In Kasama, it is 35. Kasama is the highest. So if I'm doing an analysis, I do something like this. My question would be, what are the variables that are driving these numbers? As a bank, why should it be that the average loan disbursement in Kasama is higher than Livingstone? So we start now looking at economic indicators. It could be that Kasama has higher economic activities. Maybe they've gone, there's cassava there, and there's this investor that has gone to start harvesting cassava from, or buying cassava from the locals. And the locals, they are looking for financing. So for this cheap financing, they will not go to the Shylocks, they'll start looking at the banks. And maybe this is the reason why Kasama, in terms of the appetite to borrow per customer, is higher than in Livingstone. It could also mean that in Livingstone, the time that they shifted the provincial center from Livingstone to Choma, a number of those people who were credit worthy, who had the capacity to borrow and service their debt, are in Choma, thereby taking the numbers, the appetite to borrow in Livingstone is depressed. In Mongu, it could actually mean that there is completely no proper economic activities happening, or it could also mean, it could also be a cultural issue, that maybe the losses are not risky. They are not risk takers, they are risk adverse or risk neutral. They don't, their culture maybe discourages them from borrowing. So lending institutions, they have to craft proper strategies on how they can increase the lending appetite in Mongo. What are those things that the bank should do to increase this appetite, to make the losses be accommodating to borrowing? So it could mean a lot of things, but this is why you are doing this average if thing. Looking at the numbers as easy like this, Natasha, you will not still understand what is happening until you average them. Then you start now looking for a story. Remember that every number that you see, there is a story behind it, Jesse. I've always said, numbers are driven by behavior. Even when sales is lower, you are actually doing your analysis maybe on the loans for the civil servants or whatever, you will realize that possibly those that are actually maybe are analyzing on their overtime costs, you are analyzing the subsistence, this thing, they actually go outside town. You will find most likely that employees that are highly indebted are the culprits, are the ones that are actually the many consumers of overtime allowances. They are the consumers of these subsistences or out of town per diems, whatever you want to call them. So they start creating trips. Even when you have controls in the company, these controls can actually be manipulated. There will be a genuine thing where something has been created, there's a problem out there, and these people, they enjoy traveling and consuming these costs. But you make a mistake as a company just to go and just pull the plug off. on overtime, maybe on subsistence and per diem, before you understand where the problem is coming from. You do that without a proper financial analysis. Trust me, in the next 2-3 months, you will start spending more on medical costs because these employees, they are financially stressed. You have actually put off their source of income because these people are highly indebted. They start having strokes because there's nothing that is more devastating than financial stress. Natasha, in case you don't know. Some will actually start creating, going to the hospital, faking diseases. No doctor will say, no, you're not sick if you fake it properly. You'll be given 3 days so that you go and look for money somewhere else. If you're not careful in doing that 2-3 months, the company now starts spending more on the exit packages because people will be dying. So we start spending on funeral grants and all that because you did not analyze to understand where the problem is coming from. You just went on and put off the plug because you're saying, no, this is austerity measures and whatever, cost control measures, without really understanding that there are no numbers that are not driven by behavior. When I look at the financial, and this is what I said last time, just when I was invited by Zika to present to you guys, I did actually mention this, that when I see a financial statement for any company, I'm able to know how the customers behave. I'm able to know how the suppliers behave. I'm able even to guess whether in that particular organization, there could be traces of corruption. Do you know how I would know it? If what is being supplied, I check in terms of the suppliers or the costs. You have supplied so much. I go to the balance sheet, I find that the inventory is going up. I go to the revenues, I find that the revenues have remained the same or they're going down. Then the question is, what are you buying which is not being converted into revenue? What motivated you to buy if the revenues remained the same or even went down, but your inventory is going up? Meaning that you are buying things that you don't need. Probably there could be certain incentives, personal incentives. Just looking at the numbers. So each number you see, there's a story behind it. Mrs. Slower, say amen.
Great amen. True, Jesse. But that's, and I was demonstrating this when we went to Shavonga with my senior manager and good friend Brown. Brought in these new graduates from Zika, and I was trying to show them how the numbers work. So when I look at the financial statement, I know if I find a situation where the revenues are lower than the proper plant and equipment in the balance sheet, then I know that there's a pricing problem in this company. Ideally, the revenues must be higher than, your annual revenues must be higher than the proper plant and equipment, that which is generating revenues. If, for example, you buy a hammer mill at 30,000 kwacha, and that's a value of your hammer mill or your proper plant and equipment, you take it in the village. It should be able, on an annual basis, it should be able to make 30,000 kwacha. That's what we call asset turnover. Anyway, if it's below, then I know that it's either this huge competition and
you are doing a lot of the service as players, you're taking the prices down instead of coming together and say, guys, this is not in the best interest of our returns. Or you have a lazy asset and you did not think it through when you went into that investment. Always know that any investment you go into, your proper plant and equipment in that particular what it should be lower than the revenues that you're getting. Unless projects that are new projects, unless for new projects that are highly capital intensive, like hydro, power stations, renewables. But after the company has been there for even over 20 years, the proper plant and equipment levels should be much lower than your revenues. So what I'm saying is, if you have a new investment, if it's a new investment, which is highly capital intensive, just for that particular investment, for that project, the investment cost, which will sit in your balance sheet as balance sheet figure, obviously will be higher than your revenues. But once the business matures after 10 or so years, you expect that the revenues must be equal or higher than your asset base. Because just rule of thumb, we know that your returns, which is your operating profit divided by your assets or your proper plant and equipment, that return on investment is supposed to be 10% higher, 10%, or it must be higher than the cost of capital. Let's move on. Now that you've gotten the averages, your total loans, you want to know how much loans were dispersed in a particular town. So do equals, here you do your SumIF. You go to the range, which is basically the towns. You pick the range there. You go to the criteria. You have G23. Some range, obviously, you're actually picking from your data set. You lock. Then press enter. Take it down. Oh. So here it shows, say if it was a budget, but these averages, you have them were actuals. The question would be, it will do you well to, instead of saying you are dispersing, in Livingston, you are dispersing this 186. 186,000. It would be better that if you are saying budgeting, you have found these numbers, these are actuals, for example. This is just hypothetical, these are examples, these are actuals. You want to use them as a basis to check how much can be dispersed per town. I would rather this 186, I disperse it, for example, I disperse it, or 108, I take it to Kasama, because I'll get the highest return from there, or it will be consumed quickly, because on average, the
customers in Kasama, they have a much higher risk appetite in terms of borrowing, than taking it to Mongo. Mongo, I would leave this there because they have a much lower appetite to borrow. Maybe because they are risk averse. Yet the members are risky takers. They'll just say, "Sky's over," so they'll get whatever they get. It's not going to be paid. Let it be regarded as an NPL1, non-performing loan. But these guys here, they are scared. They are scared. So I start looking at all these other things. That is, if I have the actuals here in terms of the averages, and I'm trying to decide which town should we allocate more resources for borrowing. So this in terms of decision, that's how you start making these decisions. Lusaka, I'll give it 136. No, it will still get this 138. I think, no, I'll give it, Kasama, I'll get 188. Lusaka, I'll give it 136 also. But then, that is if I'm forecasting of how much, I'm trying to make a decision of how much should actually be allocated per town. But then these are actual figures. Let's assume that all these are actual figures. So in terms of the number of customers, all I'm going to do, instead of doing the SumIF, the CountIF, I'll just say the total loans divided by the average loans. Yeah, it will give me the number of customers. So if you count this side, you'll find that these are the number of customers that you have under Livingstone, Kasama. We'll do that. I'm sure tomorrow we'll be looking at pivot tables. So we'll use the same data to look at pivot tables. You see that these are the numbers that we're getting, that you're going to get. So obviously, this is what I would actually do. This is what you should do using your data set. The data set you have is very rich. You can use this analysis. Never forget, Jesse, never forget using average in your analysis. It is a miracle concept. I'll end here. Tomorrow we can meet about the same time. We'll look at the pivot tables, try to finalize this pivot tables, maybe comments going to borders, something like that. But before we go, we always do the checkout. You can't just be in a hotel, you just leave and you go. You have to say your experience, what you have learned. So we'll start with Mrs. Slower, since you know how we do it. Checkout.
Yeah, I think every day is a greater experience. I've never looked at average. In fact, I've never known how to use average on Excel, even SumIF, AverageIF and SumIF, and I think it's a greater experience with the work that I do. I think this will make me do a better job in a more professional way. Thank you.
Sure, thanks. NK. Natasha.
Great experience. When you brought in the issues of averages of customers and voluntary, which is what we do with I can now use such functions to easily find solutions to such work. Though I was a little bit lost at the end because my network kept kicking me out. But I'm hoping that maybe if I rewatch the recording, I'll be able to catch up.
You watch the recording. Thank you. Our guest, I know tomorrow you won't be with us. It was just a joke we're giving you. But what was your experience coming into our academy classroom? Yes.
Too bad that Jonko is ending.
Yeah, it has ended. It has ended. It can't continue. It can't continue.
Yeah.
So check out.
Otherwise, I've enjoyed the lesson, and I definitely look for. I think I was sold the time you did the workshop at Zika. I just never actioned it, but I'm glad I have, and so far so good. And my mind is racing with so many things we can try and use these lessons that I've learned today. And then I look forward to learning more and learning from the ladies. I'm sure they're more experienced than myself. Thank you.
Thank you so much. So team, see you tomorrow at the same time. We'll be looking at quite interesting topics. We'll go into the pivot tables just to show you how you can use pivot table in doing your data analysis. We'll also try to use pivot tables. There's a functionality in pivot table that was added in about 2013, the data model, which a number of people don't use. They don't even know how to use it. So we'll spend more time trying to deal with the pivot tables. Thank you so much. Nasakulira mwane, ndalumbaga pati, natotera sana, nitume za huru. Bye bye.